Okay, thanks everyone for joining. This is our December 2021 employment situation press call. As always, I'm Ryan Gedney, Senior Economist with the Colorado Department of Labor and Employment. Uh, the data I will discuss today are based in part on estimates from two surveys. Statistics like the unemployment rate, labor force, total employment, and the number of unemployed are derived from a survey of households, otherwise known as a current population survey. Simply put, the household survey is meant to capture the employment and labor force status of individuals within Colorado during a given period. The household survey also includes the self-employed, independent contractors, farm workers, and those not attached to a traditional payroll employer. However, we are unable to break out those individuals at a state level. Non-farm payroll job estimates come from a survey of business establishments and government agencies and are intended to measure the number of jobs, not the number of people employed. These estimates exclude employees in agriculture, private households, and the self-employed. As we noted in today's press release, the reference period for the establishment survey was the pay period that includes the 12th of the month, while the household survey reflected the week containing the 5th of the month. The reference week shift for the household survey is atypical and usually only occurs in either November or December. It's really a holiday adjustment that happens every few years or so. However, I do want to mention that both reference periods represent a snapshot of labor market activity prior to the spike in US and COVID-19 cases due to the emergence of the Omicron variant. After this release, there will be a pause in the Colorado employment situation updates as the department shifts to our annual benchmark revision process. Revisions to 2021 and prior year's data, along with preliminary estimates for January 2022, those will be released Monday, March 14th. The release schedule for 2022 is posted on our LMI Gateway website, so I encourage you to check that out if you'd like to plan ahead. Finally, please note that the Bureau of Labor Statistics will not release state data until Tuesday. I believe it should be 8 a.m. our time. So unlike prior months, I won't be able to provide the usual unemployment rate and job recovery ranks during this press call. But again, that data will be publicly available on Tuesday. For the results from the household survey, Colorado's seasonally adjusted unemployment rate decreased to 4.8% in December, and that was from 5.1% in November. This marks the first time since March 2020 that the state's unemployment rate has fallen below 5%. Colorado's unemployment rate has declined rapidly over the last half of the year, which stood at 6.1% in July. Additionally, the number of unemployed Coloradans dropped by 9,500 in December to 154,300 in total. The count of unemployed individuals in the state has decreased by 65,000 over the past year. However, 64% of that decline has come in just the past 5 months. As always, a reminder that the total unemployed figure derived from the household survey includes a broader definition of unemployment beyond just those receiving UI benefits. The recovery of the state's unemployment rate during the pandemic recession has been substantially faster than the past two recessions. During this recession, it took Colorado only 20 months for the unemployment rate to move from the peak rate, which was 12.1% in April 2020, to 4.8%. In comparison, 30 months passed between the peak rate and 4.8% during the early 2000s recession, while 45 months elapsed when looking at the Great Recession and the drop from peak rate to 4.8%. And we also included a chart of that recovery in the unemployment rate as part of our supplemental package within the press release. The US unemployment rate decreased by 0.3 of a percentage point last month to 3.9%. The nation's unemployment rate is nearly back to its pre-pandemic level of 3.5%. Colorado's employment to population ratio rose for the fourth consecutive month in December, hitting 65%. In comparison, the US employment population ratio last month was 59.5%. The employment to population ratio simply measures the share of the state's 16 plus population that is employed. The number of employed Coloradans has increased by 54,600 since July, which is a significant driver in also reducing the state's unemployment rate over that time. Total employment gains were particularly robust in December, growing by over 18,000. That is the strongest monthly gain in employment since October 2020, when the state was in full recovery mode. The state's labor force participation rate ticked slightly upward in December to 68.3%. That is the first over the month increase in Colorado's participation rate since April. As a reminder, the state's participation rate was at 68.7% in February 2020. The US participation rate held steady at 61.9% last month and is still well below the pre-pandemic level of 63.4%. Colorado's labor force grew by 8,500 in December and now exceeds 3.2 million for the first time. As we mentioned in today's press release, the counties with the highest not seasonally adjusted unemployment rates were Pueblo, Huerfano, Los Animas, Fremont, and Rio Grande. Of those counties, only Pueblo and Huerfano also had top 5 unemployment rates in December 2020. 29 Colorado counties had December unemployment rates that were under the US not seasonally adjusted rate of 3.7%. A year prior, that number only totaled to 7. Among the 7 metropolitan areas in the state, Pueblo had the highest unemployment rate at 6.4%. Boulder and Fort Collins had the lowest rates at 3.2 and 3.5% respectively. Denver, Greeley, Colorado Springs, and Grand Junction all had rates between 4.2 and 4.6%. And it is recommended to compare all these sub-state rates I mentioned to the statewide not seasonally adjusted unemployment rate, which was 4.1% in December. Moving on to our establishment survey, the preliminary estimates show that on a seasonally adjusted basis, Colorado added 9,000 non-farm payroll jobs from November to December. Additionally, November figures were revised substantially upward by 4,300 jobs. That altered the change from October to a gain of 14,100 rather than the originally reported increase of 9,800. As a reminder, monthly revisions are based on additional responses from businesses and government agencies since the last published estimates. The state has added 152,000 payroll jobs since December 2020. Colorado has now regained 335,500 of the 375,800 non-farm payroll jobs lost in March and April of 2020. Those total gains of 335,500 over the past 20 months represent a recovery of over 89% of those lost jobs early in 2020. A similar analysis of the change in U.S. non-farm payroll jobs since April 2020 revealed the U.S. has added back about 84% of jobs lost. Colorado's rate of job recovery has notably accelerated over the past 2 months compared to the U.S. Industry growth in December was broad-based, as all but one supersector experienced gains last month. 5 industry supersectors experienced some gains of at least 1,000 payroll jobs in December, and that's on a seasonally adjusted basis. Professional business services led with payroll growth totaling 1,900 last month. Financial activities, government, other services, manufacturing payrolls grew between 1,000 and 1,200 jobs in December. At a more detailed level of employment, there were 5 industry sectors that have added at least 2,000 payroll jobs over the last 2 months. So we're looking at November and December gains there. That includes administrative and support services, the retail trade, professional and technical services, other services, and then finance and insurance. Over the past 12 months, when looking at the state's 18 industry sectors, accommodation and food services has added the most jobs at 67,900, or 45% of all total non-farm payroll jobs. Arts, entertainment, and recreation has the second most gains at 17,700. Professional and technical services has added 17,100 payroll jobs in 2021. And government rounds out the top four at 12,100 jobs gained. Construction is the only sector to experience job loss since December 2020, but it's fairly small at 600 jobs. And I have a few more points to make, but if you have questions, feel free to chat them in now, if you have some in mind, so we don't have a lot of dead space after I finish. Overall, the private sector added 7,900 jobs in December, with November payroll numbers revised up 4,200 jobs. The November revisions to the private sector, that altered the change from October to a gain of 13,600, rather than the originally reported increase of 9,400. Leisure and hospitality and trade, transportation, utilities were the primary drivers of that November revision. And interesting fact about leisure and hospitality, we reported last month that leisure and hospitality shed a little over 1,000 payroll jobs. And in fact, with this revision, it's a gain of over 1,000. So a big shift with leisure and hospitality with those revisions. From May 2020 to December, private businesses have added 338,100 payroll jobs. That's compared to the losses of 362,200 in March and April of 2020. That represents a recovery of around 93% of private sector jobs lost in early 2020, which outpaces the US recovery rate of about 88%. And then finally, here are some recovery rates for substate Colorado. Specifically, we're talking about the 7 metropolitan statistical areas, or an MSA, and then the remaining residual of the state that is not in an MSA. The Colorado Springs MSA continues to have the fastest job recovery of the metro areas. The Denver MSA has the second fastest recovery at 93% of jobs recovered. The Colorado Springs recovery rate in comparison is 113%. Grand Junction's recovery rate ranks third at 90%. Fort Collins, Boulder, and Pueblo, they all have rates recovery rates of around between 77 and 82%. And then the Greeley MSA lags the rest of the state. And as we've discussed in prior calls, a lot of what is causing Greeley to lag is that area's high concentration of oil and gas, which has yet to recover relative to other industries in the state. Now, while I've mentioned before that we do not break out non-farm payroll jobs by county, we can look at the recovery rate for the residual of the state that is not in an MSA. And this essentially aggregates to what we can define as 47 non-metro counties. Those areas shed a combined total of 59,300 payroll jobs in early 2020, but have regained back 44,700, or 75% of those lost jobs. And with that, I will move to the questions. Thank you for submitting some. Tamara asks, Ryan, do you have a pre-pandemic comparison to the 154,300 unemployed Coloradans with the survey? I'm not sure exactly what you mean by that. Maybe if you could clarify, that'd help. And is the 89% recovery rate of jobs lost in the early part of the pandemic unexpected? I don't think so. I think it's really been following trend in terms of, maybe if we would talked about this sometime last year, there was just so much uncertainty. But I think as 2021's progressed and we've seen really the unemployment rate drop substantially in Colorado and the nation, as well as jobs really recover strong, I don't think it's too unexpected. If it is unexpected, it's a happy unexpected event. And I do hope to see that continue in 2022. Again, the Omicron variant does show that there is a lot of uncertainty. And as I mentioned, this is this data. This is a snapshot prior to the Omicron variant. So it's uncertain at this point to see what kind of impact that might have on the labor market for January and possibly February. We do know that the Delta variant had some notable impacts on job gains in the late summer. Unfortunately, we won't have that data until March for January and February data. But at this point, it's just unknown what that impact will look like. However, the U.S. data for January will come out in early February. So that at least will give a good idea at the national level what that impact looks like in terms of, did the unemployment rate move up, or does it keep declining? What does labor force participation rate do? Employment to population ratio, jobs, et cetera. Blair asked, have you seen any effects on the labor market or filings because of Omicron during January? In terms of unemployment insurance for Colorado, we typically see the highest, in like a normal economy, initial claims for unemployment insurance for regular UI specifically is typically the highest in January. It's more of like a seasonal thing. But we are seeing claims a bit higher than they were in December. But again, I think that's to be expected. Weather also has an impact. But I'm not seeing anything notable in terms of higher level of payments or higher level of claim activity that I wouldn't expect otherwise. Ooh, we got questions coming in. So hold on, I gotta scroll up here. Aldo asked, Ryan, where did Colorado rank among states for its unemployment rate? So as I mentioned at the top of the call, the BLS is not releasing state data until Tuesday. And so we will be able to look at the ranking on Tuesday. I would anticipate, given the drop in the US unemployment rate and just where Colorado is ranked, basically for 2021, I'd be surprised if Colorado dropped below the top, the top 30. The state will probably remain in a similar spot. But again, Tuesday is when we'll have those official numbers. I do want to mention that all these are preliminary. All these rankings, all these numbers are preliminary, and that when we release the January prelim data, as well as our benchmark data, some of these things may shift around in terms of rankings for particular months or for the year, unemployment rate for the year, job gains for each month. So just keep that in mind when we're discussing these December figures. So Tamara, I thought you said yes, there are 154,300. What was a similar figure before the pandemic? Okay, gotcha. That's a great question. And that's what the population does grow. So unemployment rate kind of controls for that, right? So if you think about pre-pandemic, the unemployment rate was below 3%, right? And even though we've seen a steep drop over the last year in the unemployment rate, that is still around, it's 4.8%. So on a rate basis, obviously it's a lot higher. But pre-pandemic, when we're talking about the number of persons unemployed, for 2019, that ranged at about 80,000 individuals. But just keep in mind, those were historically low. That was the lowest unemployment rate the state had ever seen since we started tracking this back in 1976. But if you need that comparison, it's roughly around 80,000. And Otto jumped right on it. He had the number 84,380. But yeah, in 2019, I would say, instead of even guessing, I could even just produce a quick average for you, Tamara, and for others who are interested. So just give me a second. Yeah, 83,000 was about the average in 2019. So Ed asks, after the Legion Hospitality turnaround with November revisions, what were the gains or losses there for December? And why was there such a big revision for November? Let's see here. So I believe the gain for leisure and hospitality was around 900 for the month of December. Give me a second here. Yeah, leisure and hospitality gain was a 900. That is a big swing from a negative to a positive number. As I mentioned at the top of the call, that can be determined by additional responses to the survey. It was probably just not a great estimate at the point. You can also see that the US data every month, the monthly revisions have been very large, probably some of the largest we've ever seen. And so it is important to keep in mind that month-to-month changes and month-to-month revisions can be large, especially when you start drilling down to other areas. But I think it is at least positive to see that revision turn the other way rather than continue to decline for that month. Blair asked, any update on plans for the UI trust fund and payments to the feds? The department is working on some plans for that. I think the legislators will also determine kind of how that looks. So at this point, I don't really have any firm updates for you, but there are certainly some ideas being thrown around in terms of how the loan balance can be paid down and how those costs can be alleviated for employers, not only for this year, but for future years. Ed asked, what led professional business services to such a gain? So, that's actually been an industry, Ed, that's been growing a lot recently. Professional technical services has been one of our most robust like growth drivers during this pandemic. Think of like engineering services, computer services, things like that. So I think really December is just a continuation of that. Professional business services also led monthly payroll growth in November as well, at least from the preliminary data. Aldo, regarding Blair's question, what is the target for restoring the fund so we don't have a repeat of depletion? Seems like 1.2 billion is enough. Okay, we're shifting to UI stuff here. That's fine. So that's a good question. The fund right now is in deficit of around $1 billion. And again, that was necessary in order to continue paying UI benefits. When we talk about, there's a number of ways to measure full solvency for a UI trust fund. Based on my current estimates, the fund would probably need to be around a range of 2 billion to 2.5 billion to be fully solvent. In order to withstand going insolvent, say if another pandemic type recession happened, if their claims activity similar to the pandemic occurred, that level would need to be around 2.5 billion. However, do keep in mind that that the wage base will be increasing incrementally over the next 5 years, and that will help to replenish. It's a necessary instrument to help replenish the fund and to get that level to what the USDOL recommends in terms of when the wage base will be around $30,000. Some of my forecasts, either based on moderate economic growth or strong economic growth, it does look like by, say, 2025, 2026, the fund can be at that level of 2 billion or 2.5 billion. And that is not including any injection of, say, like ARPA money or anything like that, just on its natural course. So there's a lot of ways this could go. And I think also the outlook of the fund will depend on what's determined during this legislative session. I will also mention that payment levels have been trending over the last, I'd say, 2 months below 10 million a week, which is fairly close to what we saw pre-pandemic. I'd say pre-pandemic 2019, the average was around 8 million a week that was paid out. So that's really positive too, in terms of we're not seeing the benefit payments that are that high that would continue to deplete the fund. I will mention that the state has also not had to borrow since April, and that is because we've been able to pay those benefits with existing employer contributions rather than continuing to borrow. However, I do want to mention that I anticipate additional borrowing, very small amount, probably relatively speaking, in February or March. Rich asks, is this the 6th or 7th consecutive month that the state's unemployment rate has fallen? I just checked this yesterday. Good question. It's the 6th consecutive month. And then why has Colorado Springs job recovery outpaced other metro areas? Is Colorado Springs doing that much better in terms of job recovery, or had it fallen much farther than other markets, and therefore had a much bigger hill to climb? I'd say that Colorado Springs has consistently shown a stronger recovery, maybe probably since the middle of 2021. I can't really point to anything specific that Colorado Springs is necessarily doing that, puts it above other metro areas. I will say, like, the trade, transportation, and utility sector has been a good driver for Colorado Springs, leisure and hospitality as well. But again, that could be similar for a lot of different areas. I will say that you can at least look at some data on our press release. We have a suite um, of of charts that are available, and there are a couple that you can actually look at some of those data. What does a Colorado Springs recovery look like, and also what did that job loss look like? I will take this time too to just, if others aren't aware, just promote. I'm gonna stick this in the chat box here, just to promote something that our office produced in December in terms of looking at the metro areas in the state. Hold on a second. The metro areas in the state, as well as workforce sub areas. This is utilizing data from the quarterly census of employment and wages through June of 2021. And it's just an attempt to look at each area and then looking at industry super sectors and how do those areas, how does each of those super sectors recover? What did the job loss look like? It's a ton of data, but I think when we're talking about questions of, like, what is driving industry gains for, say, this area or that area, this may be a helpful resource. We do intend to probably update this quarterly for the next few quarters with updated data. So in maybe early March, we might be able to update this with data from September. Again, it's just a way to gauge what recovery looks like for different parts of the state. Phil, I do see a question from Namera. Phil, I don't know if you want to touch on this. Are you seeing UI claims for folks who didn't abide by vaccine mandates? And if so, are they getting approved?
Sure. So, Tamara, it's a good question. I would love to be able to give you real fixed data on it, but the data to get to that is so granular because some of the ones that would be allowed, the decisions that go out would be similar for other people, perhaps for unsatisfactory working conditions. Discharges might be failure to follow policy and or insubordination. And so it becomes really hard to get to the actual data on that. What I can tell you, Tamara, is that blanket across the board, it's not going to be 100% the people who refuse to take a vaccination and terminated receive benefits. It's also not going to be 100% that every one of them are denied. It's like every other job separation, going to be dependent upon the varying facts within each of those cases. So again, things that will be considered is actually the reason for that mandate within that industry. Is that reasonable? Whether there were certain factors allowed that might allow people to be exempted from those vaccines or not. And then primarily if somebody has refused that, the reasons for refusing it and whether that would meet a valid reason. So again, it's still going to be like any other job separation. It's going to vary dependent upon the varying factors of each and every job separation. If I could get to more data for you, Tamara, I would, but right now I'm having difficulty being able to get to that data, again, because at a high level, there are other separations that mimic that, and then you have to become so granular looking at that, it becomes time consuming. Oh, I see I have one for Aldo too. All right, Aldo is asking, do you know where the backlog of unresolved claims stands? This one again becomes difficult, Aldo, because it depends which backlog we're talking about. Again, remember that the executive order that allowed payment before processing occurred ended in August. So again, that has now created, from that point forward, unemployment claims that go back to our normal processing mode, which is that those issues on claimants hold up payment until we resolve them and determine eligibility to make the payments. I can tell you, I have seen, unfortunately, anecdotally, some people who've been waiting 11 weeks to receive payments on those. I would like to see us working a little faster on those. We continue to work through those and to work through the prior backlog that we had still left over from the pandemic. Now, notable here is most of that pandemic backlog should be worked through, at least related to job separations. Employers here recently would have received yet another large list of those decisions indicating that the individual separated as a result of COVID-19 and therefore there was no charge to their account. Obviously, that's different for contributory employers, but contributory employers up through September were receiving reimbursement from the federal government for those paid. Those went out also to make adjustments to all those employers' experience rates. So their experience rates were negatively affected when we were calculating new premium rates for this following year. Yeah, Carolyn Tucker. Do I have any updates on the occurrence of fraudulent claims? Obviously, as the pandemic unemployment assistance program ended, the percentage of claims filed each week that are triggered or that receive those fraud triggers has declined to where it's somewhere in that mid 20% range at this point in time. So it has dropped. I will tell you, because it hasn't come up yet, fraudsters out there are always looking for a brand new opportunity. So they are also trying to take advantage of the fact that we had individuals in Boulder County who have faced some very daunting issues before them. And now that there's a disaster unemployment assistance program there, we have seen attempts at fraud within that system immediately. We went live with our link for individuals to be able to file those disaster unemployment assistance claims directly on January 5th at 9:45 p.m. We saw our first 2 claims filed in that system by 9:48 p.m. Both of those claims were fraudulent in nature. I can tell you at this point, if any of you were questioning or asking about DUA, as of the close of business of January 19th, 2020, we had 2,867 directly DUA filed claims, and we had another 4,803 state unemployment claims that were filed saying they were impacted by the disaster. What we are coming across again is that those numbers are far higher than we would have anticipated and that our data would show. And basically on some of these items we have reviewed, we've seen documentation uploaded already. I can tell you out of the first 11 documents that were uploaded and able to be viewed, 9 of them were fake and fraudulent in nature in that program. So unfortunately that causes issues there on also trying to be able to make timely payments on that process. We've made some adjustments on how we're handling our fraud analysis and network analysis to try to make sure we can focus on those individuals who appear not to be fraudulent and get them paid timely. And I know, Carolyn, that may be more than you wanted, but might as well get it out here now.
And since we're on UI, Aldo, let me just loop back again to your question about, the 1.2 billion is enough. I want to just make clear too, when I'm talking about the fund needs to be at, say, a positive 2 billion to 2.5 billion to, say, avoid going insolvent if we had a recession just like we did in 2020. I'm not suggesting, however, that needs to be immediately backfilled by, say, ARPA money or some other source of funds, that we need to get there immediately. And that, again, that wage-based increase will help to return the fund. But again, I want to make clear that I'm not suggesting that the fund right now needs to be at that 2 billion level. I do have just one other thing I want to touch base on, going back to employment situation. And again, like I mentioned, the labor force did hit 3.2 million for the first time in its history for Colorado. And that the labor force is higher at an absolute level, is higher than it was pre-pandemic. And so while the labor force participation rate is slightly lower, I do think it's encouraging that we continue to see growth, monthly growth in those labor force totals. And again, that will also help as people enter the labor force, employers fill those needed job openings. I think I might have reached all the questions. So I'll give it about 15 to 20 more seconds. See if we get any more questions in. Again, I just want to remind everybody that we are going to be on a little bit of a pause here, that our next call will be on Monday, March 14th for the employment situation. And again, we'll be releasing January 2022 data. And we'll also be able to talk about all our favorite rankings for 2021. We'll look at annual averages. Again, right now we have preliminary annual averages, but I tend to ignore those just because they're going to be revised anyways. Yeah, I look forward to talking to y'all then. For those who pay attention, we will also have our expected revisions released for third quarter. That's based on third quarter QCW data. That'll come out later in February. And that'll also give those a pretty good idea of what those benchmark revisions might look like at the industry level and at the MSA level for through third quarter. At this point, it's been on average about an upward revision of about 20,000 payroll jobs per month. So right now, the production official series has been underestimating those non-farm payroll job, the total numbers. So we do expect an upward revision for 2021. With that, I'll close it and have a great day.